Wool prices are set to remain strong over 2011. Wool prices surged towards the end of 2010 and reached 7.5-year highs in New Zealand dollar terms. Factors underpinning the recent increase in wool prices include strong prices for cotton, increasing substitute demand for wool products, renewed demand from the Middle East and Europe, China's recent ban on South African wool products. In addition, this all coincided with a general rundown in wool inventories. With demand strong, indicative prices for the first combined wool sale of 2011 increased. We saw coarse crossbred wool prices increase 11 cents per kg, fine crossbred wool prices increase 8 cents per kg, and lamb wool increase 17 cents per kg. Furthermore, a South African industry group are pointing to falling production levels in Australia as underpinning strong wool prices for the rest of the year. UK annual CPI inflation surged to 3.7% in December. This compares to estimates of 3.4% increase. This is the 5th consecutive month where inflation has exceeded the Bank of England's upper limit of 3%. The Bank of England faces quite the conundrum over the next few months. While inflation remains stubbornly high, the growth outlook actually remains quite subdued. In particular, economists are very concerned about the impact of government sector cutbacks on the growth outlook over the next year. In fact, most of the increase in inflation comes from the weaker pound and higher food and energy costs. Underlying pressures remain subdued. Nonetheless, the prospect of an earlier rate hike by the Bank of England has supported recent strength in the pound and has seen the New Zealand dollar ease against the pound overnight. Dairy prices remain very strong, with the most recent global dairy trade auction showing a 1.2% increase in all trade-weighted products. However, the strength in dairy prices failed to underpin the New Zealand dollar, which actually eased slightly overnight and continues to hover around the 77-cent mark. Meanwhile, yesterday we had the REINZ housing data out for December. House sales did increase slightly, however remain at very, very weak levels. Indeed, the housing market remains very fragile. The stock of unsold houses continues to increase, and the number of days to sell a house remains at elevated levels. This suggests the balance of supply and demand remains tipped in favour of buyers. Reflecting this, prices eased 0.6% over the December month and are now down 5.6% off their peaks in 2007. The weakness in the housing market is likely to be of great concern to the RBNZ. We do not expect the RBNZ to increase interest rates until they are confident the housing market is stabilised and house prices are starting to increase once again.